Hi, I'm Amit from Vaya. I'm a pro crypto investor and hence would like to give my thoughts on sudden fall of bitcoins and other altcoins. A few weeks ago, in October, the crypto market was euphoric. Bitcoin hit an all-time high of $126,000. Ethereum surged about 3,200 and retail investors poured in amidst a wave of optimism. Now that sentiment has reversed. Bitcoin struggled to stay above $93,000. Ethereum dropped below 3,200 and the crypto fear and greed index plummeted to extreme fear. This sharp around turnaround wasn't random nor a one off crisis. It was triggered by a massive structural deleveraging event, making the largest ever liquidation in crypto history. Within 24 hours on October 10th, 19 billion in leveraged positions were wiped out, affecting 1.6 million traders. The root cause? The Federal Reserve's persistent anti inflation stance, which delivered a shockwave to risk assets, with crypto at the epicenter. In early October, bullish sentiment dominated. Bitcoin climbed past 125,000 on expectation that the Fed would pause rate hikes and soon cut rates, fueling hopes for more liquidity and the higher returns in the risk asset. However, this optimism overlooked the risk stacking up beneath the surface, namely soaring leverage and speculative derivatives. Many traders deployed 10x, 20x, and even 50x leverage on the future platform. This fragile structure was primed for collapse if the market condition reversed. On October 10th, global markets were jolted by renewed trade tensions and threats of tariff, triggering a wholesale risk off shift. Crypto, the most volatile asset class, took the brunt of the impact. As prices fell, Bitcoin plunged 14% in hours. Waves of highly leveraged long position were liquidated, causing cascading sell pressure and further drawdowns across Bitcoin, Ethereum, and other altcoins. The 19 billion in liquidation dwarfed previous events such as FTX collapse and the COVID crash. The recovery was subdued. Bitcoin dropped below 100,000, then tested the support at 93,000. Ethereum too fell sharply and the market confidence evaporated. The chart reset wasn't just technical, it reflected fundamental changes in market structure. Speculation had been violently purged, leveraged wiped out, and only long term holders remained. Why was the market powerless to rebound quickly as it has done in the past? The answer lies in the macroeconomic realities. The Federal Reserve, seeing persistent inflation and strong economic data, stuck to its higher for longer policy, elevated interest rate, and sustained quantitative tightening, pulling liquidity out and making borrowing more expensive. As a result, investors pulled money from high risk assets. Crypto, far out on the risk curve, suffered the most. Spot Bitcoin ETFs, one expected to create endless inflows, instead of that, saw 1.1 billion in net outflows in the single week. Institutional investors, not immune to broader economic fears, joined the sell off. At the same time, regulatory uncertainty persisted as the SEC delayed approvals for additional crypto ETFs, freezing sentiment and new capital inflows. Despite this gloomy backdrop, some see opportunity in the market reset. The liquidation event served as a controlled burn, clearing out risky access and transferring assets from weak hands to committed investors. The new market foundation is more stable, based on genuine conviction rather than speculative debt. Long term forecasts for Bitcoin remain optimistic. Major research firms like JP Morgan maintain price targets up to $170,000 in 2026, with others suggesting a trading range from $99,000 to $140,000. What supports these forecasts? The halving event, which reduces Bitcoin's new supply, and the growing belief that regulation will become more supportive over time. Institutional capital, currently sidelined, could return once macro stability reasserts itself, driving the next bull run. Ethereum's outlook is also promising. Leading analyst has forecasted Ethereum reaching 7,000 to 10,000 by 2026. The Federal Reserve's anti-inflation campaign reset the crypto market, purging excess leverage through historic liquidation. While conditions remain difficult, liquidity tight, sentiments fearful, institutional inflows slow, there are strong reasons to believe the long-term bull case for both Bitcoin and Ethereum is intact. The cycle now stands on a stronger foundation of committed holders, technological updates, and supportive supply trends. Once macro headwinds ease, the market could see a powerful, sustainable rally. In summary, euphoria fueled a risky bubble, the Fed's action triggered a record reset, and the resulting pain has cleared a path for more robust long term growth. With leverage purged and the strong fundamentals in place, this phase may offer one of the best buying opportunities in the current crypto cycle. Hence, I would recommend to add at this level. Thank you.